Today we're talking with Adrian Revel, owner of Safe Life Insurance Agency, a personal insurance broker specializing in home, auto, and landlord protection. Adrian works closely with homeowners and landlords to help them understand risk, avoid coverage gaps, and protect their financial future through smarter insurance planning. So today we're going to be focusing on the landlord segment. We hope to help investors make better decisions when purchasing an insurance policy to protect one of their biggest assets. So Adrian, what are the key property components landlords should consider when they're looking at an investment property?
Yeah, it's definitely a good question. So whenever an investor is going out and purchasing a home, there's really four main components that they should be looking at. The roof, the heating, the air conditioning, the electrical, and the plumbing. And in general, they want to make sure that the property's been updated within the last 20-25 years or so. For the plumbing, insurance companies want to make sure that the house is fitted with plumbing that is copper or PEX. And for roofs, they want to make sure that that roof has also been updated within the last 25 years as well. On the electrical, there's certain panels that insurance companies really don't like because they have a history of creating a fire. One of the most common ones is called a Zinsco panel.
I've heard of that.
And I have had so many people purchase an insurance policy for either an apartment complex or an investment property, and after the inspection's done, they find out they have a Zinsco panel, and all of a sudden they're hit with a $5,000 to $10,000 upgrade that they didn't plan for in the past. So those are the main four components that insurance companies are really looking to see that the client has essentially upgraded.
So what happens if they didn't upgrade it? What are the insurance companies doing about that?
So if they didn't upgrade it, usually what happens is after an inspection's done, they could cancel the policy. They could surcharge the policy and say, hey, this was misrepresented during the application process. And instead of having a 10-year-old roof, you have a 30-year-old roof, and they may charge you more for having an older roof on the property because it creates a bigger risk for the insurance carrier.
Got it. So it might end up being more expensive, or they may not have coverage at all.
Yeah, so it's, I always tell people it's really important to kind of know what you're getting yourself into, right? Yeah. So if you're buying a property as an investor, you want to make sure that you're budgeting for the things that should be replaced, and hopefully you won't have any things that come up that might be shocking to you.
Yeah, that's really important for landlords to consider because those are costly items.
Yeah, definitely.
So tell me, Adrian, how does the landlord insurance differ from a standard homeowner's policy, and what protections are the most important for rental owners?
Yeah, so a policy that's for an investor is going to be a policy that is tenant occupied, right? So it changes the dynamic of the insurance a little bit because the liability protections are usually for guests that are on property or tenants that may sue you for like a trip and fall. I recently had a very large claim where a tenant fell over a cracked piece of concrete and broke her teeth.
Ooh, that's expensive.
It ended up being a $500,000 claim. The policy paid policy limits. And so it's very important that you're purchasing the right policy to make sure that you're covering for those liability exposures. A couple other things is a landlord policy covers loss of rents. So if the home becomes uninhabitable because of a water-related claim or a fire-related claim, you still have to pay the mortgage if your tenants move out.
But they're not paying rent.
They're not paying a rent, but you still got to pay the mortgage. Mm-hmm. And so loss of rents coverage comes in to assist you with that. So it basically covers the loss of the rental income on that particular property so that you can still continue to pay your mortgage.
That makes sense. It's less about the contents because it's the tenant's contents and more about the liability.
Right, exactly.
Yeah, that's very important.
Yeah.
So Adrian, when someone converts their primary residence into a rental, sometimes they're an accidental landlord and they decide to rent out their property, what insurance changes should happen immediately?
Yeah, so one thing that people fail to do is notify the insurance company of the occupancy change. So the first thing you should do immediately is contact your insurance agent. If you don't have a specific agent you're working with, contact the insurance company and just let them know that you no longer occupy the home as a primary residence and you're going to have a tenant occupancy in there. Generally, what the insurance company is going to tell you is that the policy has to be rewritten into a tenant, a landlord form, essentially. So you'll go from what we call an HO3 form to a DP3 form. You want to do that as soon as possible, because if the tenancy or the occupancy is misstated on the policy, they could essentially decline a claim because of misrepresentation. So landlord policies are different than owner-occupied policies, so very important that you inform the agent right away so they can make that change.
That makes sense. There could be a slip and fall on the move-in day for the tenant,
Exactly.
So you want to get that converted right away.
Exactly.
Very good point for landlords. And so homeowners insurance rates are increasing. I hear about it all the time from our clients. So in 2026, how is that looking compared to prior years, and what are the factors driving these increases?
Yeah, so a lot of consumers are very scared about rate increases, and rightfully so, because in the last 2 to 3 years, we've seen record-breaking increases. One of the largest insurance carriers in the country was raising rates 30 to 40%, and it was basically being approved by the California Department of Insurance, which was unheard of until 2024. This year, things have stabled off a lot. So they are still increasing, so they're still going up, but it's following more normal trends. And normal trends are generally 4 to 7%, somewhere in that ballpark. So a lot of our insurance carrier partners have notified us that rates are increasing. It's very common to hear the term 6.9%, because this is the number that insurance companies can raise rates on you without having the California Department of Insurance intervene and audit their books. And so 6.9% is the magic number where many insurance carriers are posting those percentages.
And what's driving these increases in 2026?
Yeah, good question. So most of the things that are driving the rate increases are wildfires. Those are the common things that most people know about because they hear about the Palisades fire and the Eaton fire and the fire that we had in Paradise. And, you hear about these billions of dollars that are being paid out. And somebody has to pay these payouts, and it always falls back to the consumer at some point. So that's definitely a driving force. Another driving force is the cost of reinsurance. And so reinsurance is basically insurance for the insurance carrier. So in order for an insurance carrier to get more capacity in the state of California and still be solvent in the event of a catastrophic claim, they have to buy insurance. And the reinsurance companies are essentially raising rates on the insurance carriers, and that's being directly passed down to the consumer. So those are two of the main driving forces within rate increases this year.
Well, it's good news for the landlords that the cost isn't going up like it was before, but up to 6.9%, that can be painful.
Yeah, definitely.
So what can property owners realistically do right now to reduce their premiums, but without sacrificing their important coverages that they need?
Yeah, so again, you would talk to the insurance broker or agent, whoever handles your policy, and the first thing that I would do is look at your deductible. So historically, maybe 3 to 4 years and prior dates, a little bit before that, many homeowners had deductibles of $500 or $1,000. Those deductibles today are too low, really. Most consumers are starting to think about increasing their deductibles to $2,500 to $5,000. And insurance carriers are really starting to really show clients the rate reduction when they go up to that $2,500 figure. They want the client to essentially buy into the claim a little bit more, so share the cost with them as much as possible. So I think a lot of people are surprised when they see what the premium reduction is going to be just by increasing it from $1,000 to $5,000. So those are good things to have that conversation with the insurance agent. Other things are making sure that your house is in good condition, making sure that your the big 4 items that we talked about, your roof, the heating and air conditioning, the plumbing, the electrical, make sure they're all upgraded so that if your insurance carrier ever does cancel you for whatever reason, which is a common theme in California, at least you will have a property that's marketable. And you'll have a lot of insurance carriers that will want to do business with you because your house is in good condition.
So you could shop around at that time
Exactly.
and get a decent rate.
Exactly. What happens is when you tell an insurance carrier that your roof is over 25 years old, a lot of them will decline the application. And so it really makes the bucket of carriers that are willing to insure you smaller. And when that happens, your rates go up.
That makes sense. Adrian, what are the wildfire hardening discounts, and what should investors look for when they're buying a home related to fire hardening?
Yeah, so as of January 1st, 2026, many insurance carriers are starting to offer what they call wildfire hardening discounts. And what they're looking for is they want to make sure that you have a fire rated roof, which in most cases is an asphalt shingle or tile roof, which many customers already have. They want to make sure that you have dual pane windows, that you have enclosed eaves with screens on them, which many consumers do as well. And they want to make sure that your property is clear of vegetation. So they call it defensible space. So they want to make sure that you have plenty of defensible space surrounding your home so that if for some reason there's a large wildfire, it doesn't start igniting all the dead bushes surrounding your house, or that wood fence that's touching your house, or the trees that are overhanging your roof line. So insurance companies are really starting to look at those wildfire hardening opportunities for consumers. And so if you start focusing on those things and fixing your house to conform to that, you're going to be paying less on insurance. And it's always good to approach your insurance agent and ask them if those discounts are available, because many people don't know. And essentially, they may be losing out on those discounts when they're already available.
And it sounds like budgeting might be necessary for a landlord if a home that they have acquired has a lot of vegetation to plan for hardening at some point.
Exactly, yeah.
Are the insurance companies going to be mandating these rules eventually?
There are things that are coming out that are being mandated with certain carriers. Everybody's kind of working this a little bit different. So for example, many insurance carriers are requiring a water device that can detect leaks that is being mandated by certain carriers. Going back to the wildfire hardening, as of right now, it is more of a discount question, but we are seeing certain carriers decline applications if they do an aerial view of the property and they see trees overhanging the home. So it could be a disqualifier straight from the beginning.
So this can give us a different perspective on what makes a good rental property as it relates to our future insurance costs.
Exactly.
So your company is an independent brokerage. So can you explain why an independent broker may be more beneficial to an investor looking to buy insurance coverage in today's market?
Yeah, so it really comes down to options. Okay, the more options you have, the less you're going to be paying in insurance. An independent insurance broker does not have one commitment to one company. So our company works with over 40 different insurance carriers depending on which particular product line we're offering. When you're dealing with an independent insurance broker, every single property is a little bit different. So a 1,500 square foot house could have 20 different insurance carriers that are willing to insure it, where a 7,500 square foot house might have 5 insurance carriers that are willing to insure it. So working with an independent broker really gives the consumer options, and in turn that turns into less premium that they'll be paying. The other thing too is not only when we're producing a quote for a new purchase, but also when you're renewing a policy, the dynamics of an insurance policy can change too. So for example, maybe you have an insurance carrier that now starts forcing the wildfire hardening discounts or defensible space, and they no longer want to insure you because your house is in a wildfire area. When you're working with an independent broker, that broker is going to have options that they can give to the client at the renewal cycle as well.
Do some shopping around with some other, hopefully lower price options.
Right.
Yeah, that's good to know. It's helpful when you're working with a vendor that you could trust, but also somebody that has access to many different carriers.
Yeah, definitely.
To be more competitive on pricing. Thanks for joining us today. At Coastal Connections, we believe protecting real estate goes far beyond simply owning or managing property. It requires coordination between the landlord, the insurance broker, and the property manager. So when these roles are aligned, properties are better protected and tenants are better served, and problems are addressed before they become costly issues. Our goal is simple: help property owners make confident decisions that keep their investments protected and running smoothly. So if you'd like thoughtful guidance and a coordinated approach to managing and protecting your property, reach out to us. We're here to help. We'll help you make informed decisions every step of the way.